This is Lisa Miller and Associates, Florida Insurance Roundup, your podcast on the people, issues, and regulations shaping Florida's insurance market. Now, here's Lisa Miller.
Welcome, friends. It was 33 years ago this month that Hurricane Andrew made landfall in Miami-Dade County, and I remember it. I was there along with others from the Department of Insurance at the time, and it was the most destructive hurricane to ever hit Florida. There were trees that looked like pencils. It was unbelievable. And more than 63,000 homes were destroyed and another 124,000 damaged. 65 people perished. And think about it. There were no cell phones and barely even computers. And people came to the Department of Insurance service centers and asked for help bringing wet paper documents. We did what we could. But that hurricane remained the costliest hurricane at $27 billion. Until Hurricane Irma surpassed it 8 years ago, and then Hurricane Ian just 3 years ago that hit Southwest Florida. In the years that followed Hurricane Andrew, large legacy insurance companies left our state altogether, saying the risk exposure was just too great. Likewise, after Hurricane Irma, other companies stopped writing new policies. So have those decisions put Florida's property insurance market and our almost 8 million policyholders at greater risk today? There was a recent article in the Wall Street Journal that raised that and other questions as we enter the heart of this hurricane season. So today, we're going to have a go at that question ourselves on our program. We're also going to explore how the market has adapted over time to provide insurance for what's become one of the riskiest places on earth to insure, and at what cost and benefit to consumers. Indeed, Florida is a unique market, as we all know, and it's beyond comparison, and with it has its unique challenges that have prompted innovative solutions. It's not always perfect, but in today's market, it's working. Joining us today on the Florida Insurance Roundup podcast are two industry veterans. They're actually legends, in my humble opinion, who've each played a critical role in its market development over the past 33 plus years. Joe Petrelli is on with us today. He's the president of Demotech, a firm that provides financial stability ratings, FSRs, as is known to most, for most of the 50 or so Florida-based property insurance companies. That includes some of the recent 14 carriers who've recently come into our market. And when I worked for what was then called the Department of Insurance, Demotech came to Florida's rescue after Hurricane Andrew by providing ratings of new insurance companies that filled this coverage gap left behind when many of the large legacy carriers left the state. Joe, thank you so much for being here. Welcome.
Thank you, Lisa. As Winston Churchill once said, a lie gets halfway around the world before the truth has a chance to put its pants on. I can assure you and your listeners that the truth is fully clad and ready to be heard.
Absolutely, Joe. Thank you for sharing that. And also, I am privileged and honored to have my former boss and good friend, Kevin McCarty, Florida's former insurance commissioner. He and I went through the 2004 and 2005 storm activity. We practically slept in the Larson building, and he was amazing in his tenure between 2003 and 2016. We experienced all kinds of crises in the property insurance market, and we had 8 hurricanes in that 2-year period of 2004 and 2005. And today, he's the manager and founding member of Celtic Global Consulting, and he focuses on insurance issues and trends and works very hard to continue to drive good public insurance policy in the market. Kevin, thanks so much for joining us today.
Well, thank you for that wonderful introduction, and I appreciate the opportunity to be here with Mr. Petrelli to talk about this very critical issue.
Thank you, Kevin. So I think I'm going to get right to it. And Joe, I want you to take a couple of minutes and share with our audience why and how Demotech got started back in 1985 and what makes you unique and different, especially in this Florida market and other catastrophe-prone markets. Share with us, Joe.
Thanks, Lisa. And I think when I look back as to why we got started, actually, we're headed for our 40th anniversary, September 9th of 2025. And we got started to assist smaller regional insurance companies. And in 1988 and 1989, we heard that Fannie Mae, Freddie Mac, single family were looking for an opportunity for someone to review and rate independent regional carriers. And we presented our methodology to them, went through 4 different due diligences, 2 at Fannie with their internal team, their external team, 2 at Freddie, internal team and external team. And what we came up with is something that we've employed countrywide. We look at carriers independent of their size. We look at them based on their business model, the execution of that business model, and the complementary nature of their reinsurance program. So I think that's what makes us unique. And I think when we look at catastrophe-prone areas, whether it's wind, fire, tornado, hail, earthquake, what we're looking at is, does your reinsurance program give you the claims paying ability that you need?
Well done, Joe. Thank you for that great background. And Kevin, in your 13-year tenure, I'd love to get your view. Not only do our Florida markets have its unique challenges, but you keep up with it across the country and even internationally. And you also, I know, have a special expertise in understanding what the reinsurance market does. So if you can kind of share for our audience, particularly those that are newer audience members, the concept of what the reinsurers are doing and how they're paying these catastrophic claims that many of our Florida-based insurance companies have as partners in their reinsurance portfolio.
Well, as you know, Lisa, it's beginning in when Andrew cut its swath of destruction in Dade County. We had the major companies, national companies, retreat from Florida. We had 1 million non-renewals in the course of 6 months, which led to the moratorium, which led to a number of actions and activities by Commissioner Gallagher and the legislature to try to stabilize the marketplace in the immediate aftermath. What did settle from all that, and again, it was exacerbated by 2004 and 5 hurricanes, was that Florida, through its public policy and through the reality from the withdrawal of these major players, were reliant on startup companies or regionally based companies and leveraging their capital, which is, mid-sized firms, to leverage the capital with purchasing of reinsurance. And that has enabled us to bring in billions of dollars of capital, which has paid claims over the last decade, billions of dollars that would not have had gone on the backs of Floridians had they been forced to be in Citizens. So reinsurance is a critical piece. It represents up to 40% of the premium dollar. It goes to the cost of reinsurance because Florida is recognized as a super peak when it comes to catastrophic events, with the catastrophic event of hurricanes. And we have come to develop a system in our state where we have a backstop through Citizens property insurance. We have a ability to provide low-cost reinsurance, which is insurance that insurance companies buy, and to maximize the capital dollars and spread that risk to a larger pool around the country. And it has been critical to our infrastructure, but I can say that rating organizations play a very big role. And as you said early on in your interview, Demotech has been there from the very beginning. And there's no question that it was a transformational operation to have them so that we could have policies that were backed by Demotech rating, which would be able to be sold in the secondary mortgage market and recognized by Fannie and Freddie, which is just fortunate for our state because the consequences will be unimaginable.
Thank you for that, Kevin. That really great perspective. And Joe, I know you have been through with us the 2019 through 2023. We were down in the valley. We were not on the mountaintop where 12 insurance companies became insolvent. And you were quoted as saying that these failures were driven often by, quote, complex and fast moving pressures that you have dug into. And Kevin talked about your great oversight of this market. What do you think was the main driver between 2019 and 2023? And do you believe that, when you talk about reinsurance, Joe, I've heard you say that you believe in that partnership between the primary insurance companies and the reinsurers, and why you believe that's so important when other entities sometimes overlook that.
Yeah, I think let's go back to 2019 and 2023, and let's look at what led to that. We've always had the Office of Insurance Regulations has issued reports periodically that talked about the disproportionate level of property insurance litigation in Florida. Rough cuts, I think Florida was 8% of the homeowners insurance claims in the country, but 75% of the homeowners insurance litigation in the country. That phenomenon existed well prior to these insolvencies. Similarly, each of the companies that fell off the edge of the table when they went under had unqualified, clean, independent audits at each of their year ends prior to the year of failure. Similarly, each of those companies had a determination of reasonable provision related to their gross and net before and after reinsurance loss reserves. So when these companies went down, we looked at that situation, and I'll go back one more level setting thing. 2016 and very early 2017, you had the Joyce, the Sebo, and the Johnston court cases, which many years later encouraged the legislature to make the necessary changes that they did. But all these items, the court cases, the clean actuarial opinions, clean independent audits, they were there for every year until the last year. And when we dug in, what we found was the carriers that went under, and those carriers that went under included American Capital Assurance Corporation, which was dual rated at the A level by both ourselves and by AM Best. So that company was also in that group that went under. What we found was that group of companies over the period prior to the insolvencies, 2016, 17, 18, 19, they had about a 3% market share. But when we dug into the CFO's website looking at litigated claims, those companies that had a 3% market share consistently over the period prior to their insolvency saw their share of new litigated claims grow from 8% to almost 20% of the total litigated claims in the state of Florida. And that level of litigation, unprecedented growth, totally disproportionate to their market share, flying in the face of the actuarial opinions and audit before them, led us to do a research project. That research project found that online, these carriers were being targeted, search engine optimization, pay per click, litigation marketing. So these carriers were litigated to death in a very short period of time, and the disproportionate level of litigation in the state of Florida, I personally believe, hid that fact that would not have come out had we not developed a research project and had that undertaken. I'm going to take a breath and go on to the reinsurance piece that you asked. The partnership, if you will, and I use that in air quotes because the reinsurers are separate from. The partnership is such that the companies have put together, the companies that need that reinsurance have put together catastrophe response plans, disaster recovery plans, and with the foresight of the legislature, with the Florida Hurricane Catastrophe Fund being at those lower levels, the reinsurance community was comfortable in the past and even more comfortable now that the legislation and the reforms have taken place to come in and come down much lower than they would like to be with a larger company, because the carriers themselves have been required to have reinsurance right around 10% or more of surplus can be their net retention. But they're coming in relatively low for catastrophe coverage, but because of their catastrophe response plans, disaster recovery plans, their internal controls and procedures, they've been able to buy that reinsurance. And I certainly think that the availability at the lower limits from the Hurricane Catastrophe Fund and the RAP program when it was out there definitely enabled these companies to buy the reinsurance they needed.
we have reinsurers that listen to our podcast. We also have trial lawyers that listen to our podcast. We have a wide array of listeners. So I wanted to give that background. Sometimes I hear often that these Florida-based companies are so heavily reinsured, and they say it in a condescending tone. And in my humble opinion, I think it's one of the best partnerships that can happen. Kevin, give me your perspective. You traveled around the world, Bermuda, London, Switzerland, Germany. They all know who you are. Reinsurance is alive and well and strong, and it is a great component of this Florida market, right?
Well, reinsurance has been around for hundreds of years, and it has been essential for cross-border trade and commerce. And very large companies, as well as small companies, purchase reinsurance. The concept of reinsurance is essentially taking a risk and pooling it with a larger global risk. And then there are even retrocessionaires where you reinsure the reinsurer. So it is an axiom of insurance that spreading the risk over the largest pool is the most efficient and effective way to use insurance. So it's not just the small companies that purchase reinsurance. They are heavily reliant on reinsurance, and that is in large part because they don't have a capital base. We could create a system where no insurance company would go insolvent, but you couldn't afford the premium. Just like we could make homes that don't blow over in a storm, but you might not be able to afford to buy the house. We have to be realistic. We have to look at how we can provide a marketplace that signals to investors that Florida is not hostile to capital. And I think with the litigation statistics that Joe referred to earlier, it was paramount on the minds of investors that Florida, you could not put a figure or even a range of figures around the potential loss because of the uncertainty brought by the legal system. And whether you agree with the outcome or not, there was no doubt that the market was in free fall because of the uncertainty and the frequency and severity of the losses, largely based on the amount of litigation. And that litigation is driven, evidence suggests that is driven by the attorney's fees being awarded. And frankly, the excessive award of attorney's fees for bad faith, when, simple miscalculation or mistakes shouldn't rise to the level. And the abuses in the legal system, the frivolous lawsuits, and the intervention of unscrupulous public adjusters created a culture where after 90% of the claims were closed, they were reopened again within 6 months. Something had to be done to change the culture in Florida, because while we have had successful companies, you cannot continue to have an environment that is hostile to investors and expect money to continue to flow into Florida.
So, Kevin, I ask you this. We have a legislative session coming up in 2026 in January. Committee meetings start in October. If you were king for a day, what one thing would you suggest the legislature to do or not do as we approach this legislative session, realizing that there are legislators that listen to this podcast and want to learn and understand the industry? Kevin?
Well, first of all, I want to applaud the legislature for continuing year after year, looking at ways to strike the important balance between environment that is conducive for capital and fair to consumers. And what's not fair to consumers is 20, 30, 40% rate increases because of people abusing the system. And so we have to really go after that abuse. And I think that the legislature, the investors, like you say, are listening to this. They are also listening to whatever comes out of Tallahassee. And Florida is known to have at times been, shall we say, a little fickle when it came to legislative reforms. We knew after reforms in 2004 and 2005, we had a very pro-business legislative session, only to be undone by the intervention of a election and people coming back, rolling back citizens' rates, et cetera. So I think what the investment market wants to see is consistency and certainty. And so the less tinkering, I think, the more confidence. That said, I've always said to you, and you and I have had these conversations, Lisa, that I think the most underutilized tool that we obtained after Hurricane Andrew was the Florida Hurricane Catastrophe Fund. And it has been modified over the years to reflect changes in the marketplace. But I think it can be used in a much more robust capacity particularly with our small domestic market, to help bring down pricing by increasing that capacity. It still has the same capacity it had when it was created. And Florida has a far greater total insured value today than it did just a few years ago. So if anything, I would say preserve the confidence of certainty and stability in the marketplace. And then in the future, we can explore a lot of issues that we want to. We want to make sure whatever leakage is in the system, that there's no fraud and that there's no companies taking advantage of the system. But right now, I think less is more. And as more capital feels more confident, we'll be in a better position to make whatever changes we want to make in the future. I say that with the caveat that I think there should be a critical look at making the CAT fund much more robust, less rigid, and more in line and ebb and flow with the voluntary market.
Excellent background, Kevin. And, you and I've had these long conversations. You often have said to me that we have what are called the crown jewels of a solid market. We have Citizens, which is doing well, from 1.5 million policies down to, I looked yesterday, 770,000. We have the Florida Hurricane Cat Fund, which is what I'll call the best reinsurance mechanism to respond to what the market's doing around the world. And then, of course, we have the Florida Insurance Guarantee Association as a backstop. Joe, when you look at insurance companies to rate across the country, do you see other states that have those crown jewels, that have put together a great mosaic of what needs to be done to have a well-functioning market? What do you see in other states? And what do you think, as I asked Kevin, if you were king for a day, what would you do or not do when this session opens up in January?
We review and rate 460 companies in the U.S. And in terms of unique ratings, we're actually number 2 in terms of the number of uniquely rated companies we have. And so we do see a lot of it. I see nothing that compares to the Florida Hurricane Catastrophe Fund, in the sense that for when you have small companies that comprise your marketplace, the cost of reinsurance is going to be a driver. And the Florida Hurricane Catastrophe Fund directly addresses that. That being said, if I was king for a day, the thing that I would caution, not just Florida's legislature, but every legislature that looks at property insurance or any kind of material damage insurance, I would be careful I would promise stabilization of rate changes. I would not promise rate decreases, because when you have material damage coverages, you're looking at skilled craftsmen to make repairs. You're looking at the cost of parts and materials. I don't see any of them going down. So what we look for, I would say, is stabilization. Don't promise rate decreases, because that may be a promise that can't be kept.
And some of that, too, is a difference between premium and rate, which sounds like I'm splitting hairs, but I want our listeners to hear this. The premium is the price that I pay, and it includes what Joe said, the cost of materials, the cost to replace my home, and inflation can drive that. The rate is a whole different story, and far be it for me to talk about that. I'll let Kevin talk about the difference between rate and premium. Kevin, educate, because we don't want to talk about decreases. Go ahead, Kevin.
Right, and that's really an important distinction to make. Rate is a term that's used in the actuarial word to mean the cost per unit per thousand of insurance coverage. Premium so that's like a benchline of the cost of it, and it is charts up based upon attachment points, etc. But premium is what you pay for your insurance policy. So the rate is one of the determining factors. You have a rate that is used to determine your base cost of your home, be it a single family home, the year built, etc. It would have a rate associated with that. It is then modified by things like additional mitigation credits and discounts. What is your attachment point? What's the cost of your property coverage inside the home? Your coverage for your cabinets, etc. What's your attachment point? What's your deductible for hurricane? What's your deductible for all other perils? Is it replacement cost for your property inside, or is it actual cash value? It depends on the terms of the contract. A number of preferences that the consumer chooses in developing with their agent how they want to protect their insurance property, how much they want to self-insure. So your premium will vary. The rate may go down. This is the irony here. The rate of your premium, but your premium may still go up.
Yes, yes, yes. Today, which is August 14th, there was an insurance company that released a press release that their rates were going down. Of course, they tried to make the distinction between premium and rate, but many of the reporters just couldn't grab it. But they've announced that they're going to drop their rates about 8 to 8.5%. So we're seeing the benefits of these changes for the legislature. Kevin, thank you for recognizing that. Any final thoughts, Joe? And I'll give Kevin that shot before we close our great session today. Joe?
No, I think going back to the premium versus rate issue, one of the beauties of Florida over the years has been the appreciation in housing values. And I think that, Kevin's illustration was quite accurate. You can't have a $500,000 house last year and a $750,000 house this year and expect your premium to be the same. And fortunately for those who have that appreciating real estate, the rate per thousand usually declines as the higher you go in the pecking order. What I will say, though, I think that the idea that something gets fixed forever whether it's the insurance business or any profession is gone. So I think the idea of constantly having to fine tune and look at the marketplace in Florida is consistent with what, the reality of the other 49 states. The geography of Florida is ultimately a driver. You're sitting there between, two bodies of water. You're relatively narrow. The water heats up. There's going to be storms. The question is when. So no, I think from my perspective, I will end with a quote similar to my first one. Arthur Schopenhauer said, all truth passes through 3 stages. First, it's ridiculed. Second, it's violently opposed. Third, it's accepted as self-evident. I think that Demotech can more than hold its own against the relative impairment rates of other rating agencies, has passed through stage 2. It's already been violently opposed, and we're heading towards self-evident, which is where our record will speak for itself as the truth gets out. Thank you for this opportunity to get the truth out.
Thank you for that, Joe. Kevin, anything else before we close out today's great program?
I want to circle back to the issues arising about Demotech. I don't know Joe that well. I know we've known each other for many, many years. We worked on different spaces. He was in the evaluation of the financial strength of companies. I was doing a similar thing where reviewing the strength of companies as a regulator. So we both had shared information, had looked at the same public information in determining the strength of companies. But you don't have to listen to Joe or listen to me. We can just look at the facts. The fact is, Demotech has been in business since 1985. It was viewed as a credible and quality rating system from Fannie and Freddie back in 89 and 90. But then the financial crisis, and I think this was a time when all of the rating agencies were called into question and the validity of their methodology. And I will say to you that Demotech was reaffirmed in terms of the quality of its ratings and the strength of the methodology and the acceptability of the methodology. It's different than AM Best. If it weren't for Demotech and all we had was AM Best, we would not have had the resurgence in the marketplace after Hurricane Andrew, and certainly not after what happened in 2004 and 5. Demotech has been evaluated stringently by Fannie and Freddie, who were taken under federal control, as you recall, and it was validated as a quality system for evaluation. And then recognition in 22 by the SEC, which, as part of the enhancements and the reforms and strengthening the financial system, Demotech received approval to be one of the 10 rating organizations acceptable to, and that's a stringent review process as well. So sometimes you just don't like the messenger. Sometimes it's just you don't want to hear what they have to say. But the reality is they have their strengths, they have their weaknesses. It is always a process in motion to enhance the quality. But without Demotech, we would not have had a sustainable market. It would have been catastrophic. And Demotech has been transformational in the process of ensuring stability in our insurance market, creation and growth and capital in our market, as well as preventing disruptions in other parts of the larger economy, particularly the real estate market. So I just say, hats off to Demotech. Thank you for your contribution to the revitalizing the marketplace and continued success in the future.
Thank you for that, Kevin. And I echo that, Joe. I'm thrilled, Kevin, that you're on this program. I want to thank you for your continued work in public policy and for recognizing Demotech's great place in the market. I've worked with Joe for 25 years and feel the same way. So thank you, Kevin, for being on today.
My pleasure, Lisa.
And Joe, you heard it from one of the greatest commissioners we've had in this marketplace. And I too add my heartiest congratulations on your anniversary, your 40th anniversary. I had a CEO call me this morning and said if I happened to be talking to you, he wanted me to pass on his good wishes. And I told him to give you a buzz today to celebrate your long tenure in this market. And I work with so many companies in the marketplace. You know, I advocate for them and help them in the regulatory markets understand, you know, Florida's tough. Let's just face it, folks. For those of you listening, it's not, Kevin used to use his expression all the time. It's not for the faint of heart.
Right.
It ain't for the faint. And so, you know, Demotech plays this key role in this marketplace. And of course, our great insurance regulators, we look at Commissioner Jaworski. He always has the consumer at the top of the spear. He announced rating decreases in auto last week and directly tied that to what's going on with the changes that the legislature did. So we've got the worst catastrophe-prone area in the world, as Kevin calls it, a super peak. We've got tough regulatory market, which we need. And I believe that these insurance reforms of 22 and 23, after years of double-digit rate increases, we're going to see this stable market. And if you aren't following Insurance Commissioner Jaworski's Property Insurance Stability Report that comes out twice a year, we'll put the latest one, I think, from July in our show notes. And it just is showing a continued improvement in this marketplace. And one point to note, if I hear one more time people that are not agreeing that the market is better or want to say that consumers are losing their ability to access lawyers, I don't know about you, but I still see the ads on TV. I still see the billboards. The governor called them billboard lawyers. You can call a lawyer anytime you want to sue an insurance company. Your rights were not taken away, but that's often what is said about the reforms of 22 and 23. So I want to hear your perspective. One of the things I pride myself on with this particular show is, you know, like I said, all walks of professions listen to what we do here, and I hear from all sides, and it helps me in my job. It helps Kevin and his, and Joe and his. I pass it along. You can leave us a comment on the air by calling 850-388-8002. That's 388-8002. 8002, or shoot me an email. Many of you know my email by heart, Lisa Miller at lisamillerassociates.com. Please follow us on all of our social media accounts on LinkedIn, Facebook, X. Like and follow what we do. We have grown this village. We have almost between 15 and 17,000 registered people listening to what we do, and people read our newsletters. This is a movement here that we're doing in our firm, and can't do it without you. And be sure to sign up at our website, lisamillerassociates.com. If you have those that need to keep up with the market, we do everything we can. It is a free service, and with great friends like Joe and Kevin, they help me keep going. So that's it for this Florida Insurance Roundup program. I appreciate you being a part of it. Remember that we've got a passion for policy, great client success, and we want to do it right. So until next time, stay safe, Florida.
This has been Lisa Miller and Associates Florida Insurance Roundup, your podcast on the people, issues, and regulations shaping Florida's insurance market. For more information on today's program, please visit us on the web at www.lisamillerassociates.com.